Well, I think it's pretty soon. I don't think it's anything to worry about. I think actually it's a sign that the economy is returning to a more normal position. It's taken a long time to get there, and we're not fully there yet. My last meeting was a couple of weeks ago. I thought there was a case for actually starting that slow journey of back to more normal interest rates then, but it's something we don't need to hurry into. But I think the time is coming, but I don't think it's anything to worry about. It's a sign of health.
I mean, we used to think, not that long ago really, 5%, normal kind of interest rate, mortgage rate, 7%, maybe 6, 7%. Do you see us going back there in the next decade or so?
I think there are some reasons for thinking that the new normal, if you like, is a number lower than the old normal. The old normal is about 5%. In fact, if you went back to 1694, you mentioned a moment ago, the average interest rate, the average bank rate over the 321 years, if I got the numbers right, is almost exactly 5%. And it was 5% in the 10 years leading up to the financial mess of 2008. I think there's a few reasons why when we get back to a new normal, which I think it'll take a little while to get there, it'll be less than 5. It could be 2.5, 3. So there's something materially lower than it was, but higher than we are today.
Right. Now, is it going to be bumpy going from where we are to whatever the new normal is? You're presumably going to do it in quite small steps. It's not going to be one sudden 2% rise in interest rates, is it? But, I mean, how much worry should there be?
Well, it's always something to worry about, because if you look back, in my life, in your life as well, there's been plenty of occasions where the Bank of England, when it started to raise interest rates, it had to do it very, very sharply. Early 70s, late 70s, early 80s, late 80s, early 90s. When interest rates began to go up, they then went up very, very sharply. But on nearly all those occasions, I think, inflation had got close to becoming out of control. And that isn't where we are right now. Inflation is extremely low. It'll probably move back up toward our target level. We're Bank of England, we're aiming at 2%. But because the path of inflation will itself probably be gradual, I think the path of interest rates will also probably be gradual.
Right. The connection between interest rates, the kind that you've been voting on, the bank rate, and the mortgage rates people pay,
yeah.
I mean, for people who are not on tracker rates, it's a slightly nebulous connection, but you would expect those to drift up as well, presumably.
Yes, they're likely to. As you say, people who are on tracker mortgages, that'll be automatic. Yeah. People who are on 2-year fixed-rate mortgages, 3, 4-year fixed-rate mortgages, maybe they're on one at the moment, it'll roll off a couple of years down the road, 3 years down the road. I would expect that by then interest rates will be a little bit higher than they are today, and those rates will be a little bit higher. But I think it'll be gradual, I would think.
Looking back over the last 6 years, you've been there in the Monetary Policy Committee. Anything you would have liked to have seen different? I'm actually thinking in particular about fiscal policy. Have you felt fiscal policy has been working against you? We had the whole debate about Plan A versus Plan B. Yeah. I don't know where you were on that.
Well, I wouldn't use the words working against. I think it was inevitable that when you start from such a difficult fiscal position as the country had inevitably got into after an enormous recession with a huge deficit, the right strategy was to try and gradually bring the deficit down. It was happening in an environment of weak demand in the economy and relatively high unemployment. We then were using monetary policy to try and kickstart the economy. So we've had a very expansionary monetary policy, actually a pretty expansionary fiscal policy, but gradually trying to bring the deficit down. So I think the combination of the two has been what textbooks would tell you should have had. Very loose monetary policy, an attempt to slowly bring the deficit down.
Has the effect of that been, though, that we've sort of pumped up property prices and kept the economy sort of propped up on property prices? And would you expect that to change as monetary policy pulls back?
Yeah. I'm not sure I would quite describe it as a pumped-up housing market generating a sort of boom in consumer spending, which has happened in the past in the UK, absolutely. I don't think that's quite where we've been. What we've seen over the last few years is, thankfully, a recovery in consumer spending, but not runaway consumer spending. And we certainly haven't seen a big rise in loans to households. Mortgage debt has been only very gradually moving up. In fact, the total amount of debt that households have has fallen quite materially relative to their income. So actually, people have been not borrowing very much. Consumption has begun to recover. Investment has also begun to recover. We've now got back to more normal growth rates, but I don't think it's been on the back of a boom in consumer spending simply driven by house price rises?
Just very briefly. I mean, sometimes you can feel very optimistic about our economy. You can look at the growth rate and the employment numbers. Sometimes you can wake up in the night and think about productivity, the balance of payments, deficit. I mean, which are you? Glass half full or glass half empty?
Well, I can't remember any point in my life when there haven't been things to worry about that could go wrong in the UK economy. There's always something that could go wrong. I'm much more optimistic now than at any time since I joined the Monetary Policy Committee 6.5 years ago. I think there was a really dangerous situation in 2009, 2010 with the banking system, near collapse. I think we're in a much better position now than at any time in the last 6 or 7 years. Certainly there are things to worry about. We don't know how Greece will play out. China's situation is rather worrying. But within the UK economy, consumer confidence is pretty strong, corporate confidence is pretty strong. The financial system's actually operating near normal now.
David Miles, thanks very much indeed.
Thank you.